Sanjiv Bhasin is now joining us. Sanjiv, what do you make of the market movement? Was this sort of a correction expected? Do you expect it to continue? Now till now we've seen all the corrections being bought into very fast, but you expect this one could be a slightly deeper one?
Yeah, hi. Well, Pankaj, we've been calling for a correction since about 10 days, 15 days. We thought 92.50 and above, there is a lot of froth. And now it's visible, the mid-cap part of the index, the ETF, the SIP flows, and now everyone gung-ho that domestic investors will take you to, the sky. So I'm very, very cautious on the market, and I think this is just the beginning. We think 93.50, 9400 is where we are stretched. We had a year-end target of 10,000. We had a year-end target of 23,000 on the Bank Nifty. All those have come far too soon, and now we think the euphoria may turn into a little bit of a bubble. So we are cautious on the market. We think a correction is very healthy and is much on the cards. And we think the month of May can see at least a 500-point correction on the Nifty.
Right. The point that you just made, Sanjeev, that, all the targets for all the stocks by most of the brokers have been met, which tells you that, returns have come in very fast. And now, say, even if the markets don't correct, even for the next 1 year, returns would not be quite meaningful, even if the markets were not to correct from here on?
Yeah, Pankaj, it's all about greed and fear. You recall when we were there at 7,900 and 8,000 and imploring you that this is the best time to buy because fear and prices are on your side. Like you pointed out, now greed is evident and there is no price comfort which you can do. And if there is in the next 3-4 months, if there is a sharper than expected geopolitical risk or a sell-off like you've seen in crude, then your comfort level is going to be very, very much tested. So now you are valuing at least a stock if you invest with the next 18 months, not with a 3-month or a 6-month window. So, like I said, I think greed is written across the board. And that is where you have to be cautious. There was a lot of fear, and that actually was a very good time when we did stick our neck out. So I'll give you an example like an Asian Paint. At 875, it was the worst stock. It was the worst proxy to rising crude. And today it's, lo and behold, it's 1150. It's the best proxy to falling crude and the consumption. So if you bought greed, if you bought fear, you are riding home the greed in just 3, 4, 5 months. So like you pointed out, now if your horizon is short, then you have to be prepared that the pain can be sharp. So I would say if you want to invest now, look for a longer term or then stick to some of the defensives which are giving you an excellent risk-reward ratio, particularly some of the pharma and the IT counters.
Right. Can you talk about pharma? What's happening over there? Everything wrong that could have gone for the sector is now coming true?
Correct. And you're getting stocks at 14-15 times along with the IT bunch, with everyone now making a plethora for PSU banks and housing finance. And I was just hearing the largest mutual fund that they have also dumped pharma and bought. So it tells you that now the risk on trade is fully, implemented, and you can't but get stocks like Dr. Reddy's, Sun Pharma and Lupin. As a disclosure, we've had a buy on these from say about 5-7% above them, and we continue to buy them on all declines. And these are going to be our favorite stocks, at least for the next few months, where we think that you could get at least a 15% return. So your net exposure is that people cannot sit on cash right now. The problem in a bull market is there is a left out feeling. And that is why we are advocating pharma and select IT, where we have a lot of comfort on the risk reward ratio.
Right. Also, if you could just tell us, I was just looking at Sun Pharma versus some of the other mid-cap pharma companies that have not corrected. Valuations of Sun Pharma, assuming a 2-3% EPS cut next year than what is already expected, is broadly in line with the mid-cap space. So it's better to own Sun Pharma rather than some of the mid-cap mid-cap pharma companies?
Correct. Precisely. You hit the nail on the head, Pankaj. You couldn't have sounded it better. That here you are getting companies who are huge cash generators trading at 14-50 times, only with the oversee that FDA approvals and disapprovals and observations. I mean that now even my 13-year daughter tells me it's a sold out story. So if you can't buy them at these prices, then you'll never be able to get into these pharma stocks which are not local, but globally they have become renowned players. And like I said, a 2% or a 3% EPS spread can easily be corrected in 1 day if the Halol plant gets an upside, or in Lupin you get some of the observations which the company has totally reiterated are just casual observances. So I mean, you'll have to dig little deeper. You'll have to go through the pain, because State Bank can be 320 and Lupin can be 1250. So we are of the view that there is a lot of risk reward and there is a lot of money on the table if you can actually start buying these stocks.
Right. Sanjiv, when you say that you have to go through the pain, you mean, something like what real estate has shown? So you had recommended some of the real estate names like Oberoi, Godrej really far back. But, in just last 1 month, these stocks have given returns, and over a period of 1 year, now they are looking substantial. So that's what you mean. Returns will be back-ended, but whenever they come, they'll really come fast.
Correct. That's the nature of markets, being patient. Time is your biggest friend if you can sit through. So 290 rupees Godrej didn't do much for the whole year, but in 1 month it has almost given you, now it's double of that. And we still think Godrej is one of the best plays, as we've said, pedigree, management, execution, and the lease model is worked brilliantly. And now you have a reduction of debt. So whether it's Godrej, it's a Oberoi, it's a Shobha, even DLF, 150 is where we have been very, very bullish on this stock. We will again look for decline, but it's telling you that whole, just avoid sector has turned out to be the darling of the markets, and it's being chased by everyone. And the most hated sector now, IT and Pharma, with big bellwether market cap stocks which are globally implanted, are giving you excellent risk reward ratio.
Right. In terms of Pharma and IT, do you think they are the best plays, or it's only limited to Pharma right now?
No, so we have a basket of 5 stocks. If I disclose Dr. Reddy, Lupin, Sun, HCL Tech and TCS, and we've added a Coal India. These are our 6 top picks in the frontline index. You can add 3, 4 mid caps, which we can suggest. We are very bullish on R Power. That we think is going to be our dark horse of the year. We have a very, very bullish view on this one. Gujarat Pipavav is another stock at 155, where we are very bullish on the Baltic Freight Index and the APM stake being 43%. Then thirdly, we would also advocate Dish TV. There is a little apprehension, Pankaj, that the Jio thing can be a hard hit, but we think at 95, Dish has a brilliant risk reward on the back that ad revenues have increased, their subscription base has gone up, and it's a very good consumption play to be played out in the next 6 to 9 months, where we think they could, it will be in triple digits, 115, 120 is where we think this could be in the next 1 year.
Right. When you say Reliance Power, of course, Reliance Power now has a sufficient history back from 2008, and it's never done well. So when one does allocation, one should know that if the returns come, it will be really big, or else it will just languish over here. So it should not be one of the top holdings in the sector, and names like Lupin and the top 5 that you said earlier should be a part of core holding.
Correct. And our target on Reliance Power is not 52 rupees, it's 65 and above. So we will not advocate a sell before you get to 65. Now that may take 3 months, 6 months, 9 months, 12. But the risk reward of owning a stock on power, NTPC has just said that their cost of power is the lowest in the last 12 years. It's fallen by 40 basis points. It's 2 rupees. They're working at 73% prime load factor. The stock has done nothing because there's a 10% overhang of an OFS. But we are recommending anything closer to 160 on NTPC. It's the steal of the year. So like I said, we are all touting and buying the PSU banks because power and coal have turned around. We've been bullish on those stocks. But where is the real asset? The real asset is Reliance Power. Whether it's Sasan, whether it's Butibori, whether it's all of their plants are working at 73 to 75%. The new regime in UP should be another path breaker. So you can't go wrong if you shun this stock just because of the pedigree of the management. That itself is hiving off a large part of their debt overhang. I mean, Reliance Capital, Reliance Infra are in the process of being re-rated. So Reliance Power gives us excellent amount of comfort. And like I said, we will not touch this stock till 65 rupees.
Right. Sanjiv, what will be your call on something like a Avenue Supermarket? So numbers are tomorrow. The stock is up 5%. This is the first time they declare numbers. Of course, not giving a call, but do you think markets will be excited about it on Monday?
Well, you should also mention Future Lifestyle, my 125 rupee pick. You see where that is. It's up 2.5 times. So we played it through the Future Lifestyle, Future Retail pick. And we think now these are opportune times to book profits and get into some of the pharma names. We think it's fully priced at those levels. There is an overhang now that institutions are playing that. It will become totally an institutionalized stock. and that's why you'll have hardly any beta on the way when it starts to correct. So I would say the best is in these prices. This is not the time to be brave-hearted. If you want to look for a story, there are ample enough stories going around in large cap stocks which are trading at 14-15 times, which give you a comfort level at 9,300 where the market looks extended.
Right. But overall, you think retail as a sector, again, it's something which people have just written off. And again, the same story what you said. Margins were at an all-time low for Shoppers Stop, for Future Retail, for some of the other large cap retail names. And post that, they have bounced back in the last 2 quarters?
Yeah, like I said, Pankaj, euphoria and themes is what the market is playing out. Now, if you caught the theme correct at 550, 600, then you made a lot of money. Same is the case with the rest of them. But, the real steal was 6 months or 9 months back when Future Retail was at 125 and hardly anybody wanting to touch that story. So, like I said, I will wait for the numbers. We, as a house, we are not very overweight that stock. We've been waiting for corrections. They've hardly come. But we think the valuations are rich. And like I said, we want valuation comfort now on the cusp that there could be a larger than expected correction. And there would be hardly any place to hide if you are not, correctly positioned with defensives in your portfolio.
Right. In terms of, in terms of the PSU banks and, the news flow that you are getting, you think that PSU banks have already factored in or investors have already factored in an NPA resolution? And it may really be a slower than expected path now. So chances of disappointment in PSU, private sector, corporate bank names are higher now, or you would be bullish on these names?
No, we've been very bullish on the PSU pack. If you recall, all the way when State Bank was 175, PNB was 75, Bank of Baroda was 120, Union Bank was less than 110. Now, of course, they have played out, but we think the best of the news is priced in. Between the action and the proposal, there will be a huge amount of implementation timelines and committees, and who's going to bear the brunt of the haircuts. It's a very big positive in the longer run. But I think whenever you get these mid-cap banks starting to trade at one-time price to book, they generally start to give you caution, and that's the time the correction comes in. 0.5, 0.6 times is the best time to buy them, or maybe just 0.5 times and then ride it up to that one time. So I would be a little wary of them. I would say wait for the results. Let's see more color on the NPAs, how the provisioning, what is the cash on hand. The bank, despite the government talking big, it has hardly recapitalized the bank. So you've just done number juggling, and from last year's AQR, there is a huge base effect where you will see the results please you on the upside. But if that's a one-on-one effect with the last year. So I would say this is a time when you should be cautious, but declines would be a good opportunity because they will be a good asset class going forward.
Right. Sanjiv, thank you so much for taking out time for us. Always good to get a perspective from